Okay. Okay. Let's get started. Guys, let's get started. So, today what we are going to do is this particular question paper, which is of section A and section B of September or December 2023 hybrid exam. I think this, yes, okay. Yeah. So this is section A. And as you know, in section A, we have three scenarios, 5 marks each, 15 questions. Okay. And this is a past exam question paper. So it might not be the same as the past exam, but similar questions from the past exam question paper. So what you need to do is, what we will be doing is, we will be reading the scenario and attempting these questions, answers independently. All right. So scenarios first is Horty company. Okay. You open your laptops. Okay. Each time I asked you for the question answer, I want you to write that down in your Excel or your Word. Okay. Or if you have notebooks, just mention it down. Yeah. Or in kit you have, whatever it is. Then what you have to do is, once I'm explaining the answer, whether it is correct one or incorrect one, give yourself a marking, right? And so that from section A, we will be, each one of you will be able to identify how much we are scoring, whether we are scoring above 50 or whether we are scoring below 50, in which area of syllabus we are not scoring well, whether it is risk or internal control or substantive procedures, where we are not scoring, we'll be able to identify. Okay, so you are an audit manager of Horty company and you are considering a number of ethical issues which have arisen on some of the firm's long-standing audit clients. It is 1st July 2005. Tree company. Horty company is planning its external audit of Tree company. Yesterday, the audit engagement partner, Charlie Trover, discovered that significant fee for information security services, which were provided to Tree by Horty, is overdue. So there is an overdue fees. Overdue fees means which threat can arise? Self-interest threat can arise, correct? So, and what are the safeguards we can kept in place? Talk to the those charged with governance or audit committee, right? Or do not give the audit report until and unless the overdue fees is paid back. Very good. Charlie hopes to be able to resolve the dispute amicably and has confirmed that he will discuss the matter with the finance director, Percy Marsh, at weekend, as they both are attending a party to celebrate the engagement of Charlie's daughter and Percy's son. So when you mention this, what is the issue here? Yes, Charlie Hope. Who's Charlie Hope? Charlie Hope to be able to know. Charlie Trover. Yes, he's the audit engagement partner, isn't it? Now, Charlie Hope, he will discuss the matter with finance director. Who's finance director? Client, right? His son, finance director's son, and Charlie, the partner's daughter, are getting married. So there is a familiarity threat. So this is also a important element. Okay. Bush Company. Horty is the external auditor of Bush Company and also provides other non-assurance services to the company. While performing the audit for the year ended 30th November X4, the audit engagement partner was taken ill and took an indefinite leave of absence from the firm. The ethics partner has identified the following replacement and is keen to that independence is maintained to the highest level of Brian Smith, who is also partner in charge for tax services provided to Bushco. So there is a self review threat because the same partner who has provided tax services will be appointed as an independent partner, correct? Right, correct. So then what will happen? Independence could be compromised, right? Yeah. Monty Nod, who was the audit engagement partner for 10 years, year ended 30th November 2000 X3. Yeah. Huh? You have done this question? Oh, okay. Let's see if there is anything else coming up. Yeah. Okay. Um, Casey Dixon, who introduced Bushko as a client when she joined the firm as an audit engagement partner 5 years ago. Pet Russo, who is also the partner in charge of the payroll services provided to the Bushco. Plant is a large private company. with a financial year to 31st March and has been an audit client for Horty for several years. Alan Marshlow, a partner of Horty Company, has acted as the engagement quality reviewer on the last two dates of the audits to the year ended 31st March 2000 At a recent meeting, he advised that he no longer can be an EQR engagement partner and he is considered accepting the appointment as a non-executive director and will sit on the audit committee of the plant. The board of directors has asked Horty Company if they would be able to provide internal audit services to the company. Weed, a listed company, is one of Horty's largest client. Last year, the fee on audit services was 1.2 million and it is expected to be 1.3 million, which represents 16% and 18.1% of Horty's total income. So there will be self-interest threat because if you get a fee more than 15% of your total fee for the past consecutive 2 years, there will be self-interest threat. So this question is entirely on part A of your syllabus, which is ethics and professional matters. Which of the following statement correctly explains the possible threat of Horty's independence and recommends an appropriate safeguard? An intimidation threat exists due to overdue fee and TREE should be advised that all fee must be paid prior to the audit report submitted. Self-review threat exists due to the nature of the audit work which has been performed and an engagement quality review should be carried out. Self-interest threat due to relationship between Charlie and Percy and should be removed as a partner. So just point down the answer. So which is the correct statement? Is it 1, 2, and 3? All the three are correct? Or 1 and 2, 2 only, 3 only? Just mention the answer in your laptop and then when we discuss it, check whether it is right or wrong. Clear? We're done? So the correct answer is option 3 only. Okay, it's option 3 only. Why it is option 3 only? Because when there is overdue fees, more than intimidation threat, you will get self-interest threat because you want to somehow get the fee back. So you will do whatever you want to for the client. That is self-interest threat. Self-review threat exists due to the nature of non-audit services which has been performed and an engagement quality control review should be carried out. Where they are saying there is a self-review threat, there's no self-review threat, right? In terms of Horty's independence and represents appropriate safeguard. See, for Horty, in represent which of the following threats Horty's independence and represent tree company, correct? There is no self-review threat at all, no? Correct, right? There is no self, so this is not applicable at all. It's not applicable, correct? The correct answer is self-interest threat, right? Yeah. So if you have answered it correctly, give yourself 2 marks. If wrong, give yourself 0. Taking into account the concern with the ethics partner, which of the partners identified as potential replacement should take over the audit of Bush Company? So the question here is, for Bush Company, who should take over as a partner? Whether it should be Brian Smith, Monty Nod, Casey Dixon, or Pete Russo. Who should take over? Who should take over? Whether it's Brian Smith, who has already provided tax services, whether it is Monty Nod, who has been auditing this firm for the 10 years, whether it is Casey Dixon, who introduced Bush as a client, when she joined the firm as a partner 5 years ago, or whether it is Pete Russo, who is also partner in charge of payroll services provided to Bush Company. Which will partner should be appointed as a partner of this particular engagement? Okay. So what is the correct answer? Okay. The correct answer is option C, Casey Dixon. Okay. Why Brian Smith cannot be charged? Because he is already providing tax services. So hence there will be self-review threat. Why not Monty Nod? Monty Nod is a good partner. No, he has 10 years of experience. No, after 7 years, you have to be rotated. And or you there should a cooling off period of 5 years. If I'm not wrong, it is 2 years, right? Casey Dixon joined the firm only before 5 years. So 7 years have not been, I mean, she has not audited this client at all. So she just joined 5 years, but she is not new to the company, to the firm. She's not new. She joined Bush, she brought Bush Company as a client. Doesn't mean she has a relationship with the client. Is that she is the partner and she was able to negotiate with the client and bring her to the firm. So hence she is the best partner, right? So Casey Dixon is the right answer. Which of the following option identifies the threats to Horty's independence and proposes an appropriate course of action? For the firm, Alan Marshall accepts appointment as a non-executive director of plant. Huh? Alan Marshall. Alan Marshall, which is respect to plant company. This one. Just read this. Plant is the largest private company and has been auditing Horty for several years. Alan Marshall is the partner of Horty Company and has acted as EQR on the last two audits to year ended 30th September, March X5. At recent meeting, he advised that he can no longer be an EQR as he is considering accepting an appointment as non-executive director and will sit on the audit committee of Plant and Co. The board of directors asked Horty if they will be able to provide internal audit services to the company. Okay. So these are the two things that has happened. Okay. So Alan Marshall is exiting from EQR partner and he's going and joining as a director of Plant and Company and will sit on the audit committee. So there is an employment by a partner to the client, from the firm to the client. So what threat will happen or will occur and what we should do? What threat could happen or occur? If Alan Marshall goes and joins the firm, what threat could occur? What threat could occur? So from the firm, he resigned and joined. See, definitely you can do an elimination process here. It's not just familiarity. Why it is not just familiarity? First and foremost, if Alan Marshall has been a partner, he's in a significant position. He goes and joins non-executive director and joins the audit committee. That is also significant position. So they can exert significant influence in both angles. So there is he was a partner. All his subordinates who are in the audit firm currently are interested to do anything for Alan Marshall. Correct? So there will be not just familiarity, but also interest threat. Second thing is that familiarity happens when you have relationship, that to close relationship, which are significant in nature. See, even though I have some kind of, interest with the partner, he's not related to me, right? So familiarity threat doesn't happen quite significantly. What happens is self-review threat, right? Self-review threat. Because Marshall is now going and joining as a audit committee, and he knows everything, and he will be the one who have prepared, done the review of the financial statement. So he would not have reviewed the financial statement objectively. So hence the correct answer is option 2. And the issue is so significant that no safeguards can actually mitigate this issue, because both sides he's having significant position. Asjad, got it correct? Yes. All of you correct. Great. You are separately considering a request to provide internal audit services and remit of these services if they are accepted. Which of the following would result in Horty company assuming a management responsibility in relation to the internal audit services? Taking responsibility for designing and maintaining internal control systems. Determining which recommendation should be taken at priority and implemented. Determining the reliance which can be placed on the work of the external audit. Setting the scope of the internal audit work to be carried out. Okay, what is the correct answer? Sorry, yeah. You are separately considering plans request to do internal audit services. So if you are doing internal audit services, you are the one who's auditing plant co. So what will be assuming a management responsibility in relation to internal audit responsibility? Which are the options? You will be doing a management responsibility as part of internal audit. So taking responsibility for designing and maintaining an internal control system. Determining which recommendation should take priority and implemented. Determining the reliance that can be placed. Setting the scope of the internal audit work carried out. Done? So what is the correct answer? So 1, 2, and 4 is the correct answer. Why? Because except 3, determining the reliance which can be placed on the work of an internal audit services is kind of a procedure that you do as part of the external audit, right? But gone wrong. Yeah. So the correct answer is 1, yes, because if you take the responsibility of designing and implementing internal control system as an internal auditor, you are acting as a management, because it's management responsibility to determine and maintain internal control system. Determining which recommendation should be taken on priorities, again, deciding which you will take. And as an auditor, we just have to provide the recommendation. Which recommendation would be taken on priority is decided by the management. So that is also management responsibility. Setting the scope also is management's responsibility. So hence, all the 3, 1, 2, and 4, if you do, you are assuming management's responsibility. Which of the following actions should Horty take to maintain their objectivity in relation to the level of fee income from Weedco? Which of the following actions should Horty to maintain their objectivity in relation to fee income? Communicate level of fee income to those charged with governance. Okay. Use separate teams of audit and non-audit work. Request payment of current year audit fee in advance for any work performed. Request a pre-issuance review conducted by an external consultant, external accountant. Which are the correct ones? This kind of questions are very critical and crucial, because one sentence wrong, your entire marks will be lost. So take your time, think, and then mention the answer. Communicate the level of fee income to those charged with governance. Should you take it or not? As a safeguard. And this is in relation to fee income only. So what are the safeguards you can apply in terms of fee income? So think practically, as a use your common sense, that if you have a fee income, dependency with respect to weed company, if you keep two separate teams, will it work? No, definitely it won't work, because still your fee will be the same, right? So definitely that answer will be do not take. Similarly, communicate the level of fee income to those charged with governance. Yes, because uh, you know, yes, it's a fee. And secondly thing is that they are the ones who are giving us a fee. Second thing is that when you communicate to those charged with governance, they know that there is some independence issues. So this is correct. This is wrong. Request payment of current year's audit fee in advance for of any work being performed. Can we do that? No. Why? Is not solving the total fee that you have received. No. See, I am supposed to receive 100,000. If I take advance, my total fee will be still 100,000, right? When there is fee dependency, we have to try to reduce the total fees we are charging. Request a pre-issuance review by an external consultant. Correct. That is true. So take, do not take, and take. This will be the correct answer. Okay. Have you done this? Take it. Why we took pre-issuance as a take? Pre-issuance is what? Hot review. See, when you have a fee dependency, you will have self-interest threat. Correct? So you will, uh, because the client is giving us fee, I might even give kind of like a incorrect opinion as a correct opinion. So to avoid that, if an external consultant comes, he will be reviewing it objectively. That's the reason we took that. They might identify it, but we might not, because we are scared that if we give a incorrect opinion, let's say, for example, we gave a qualified opinion, right? Or we say that there is misstatements, the client will not accept and they will not give us our fees. So we will be scared because we are having self-interest threat, right? Chester company manufactures and sells pet toys to the wholesale market. It has prepared its financial statement on 20th February. It is 1st July X5. You are an audit assistant with Durham Company and have been assigned the current liabilities balances in the audit plan work. You have calculated the payables period 66 days and have asked the directors of Chester to provide an explanation as to increase in days. Huh? Chester manufactures, sells pet toys to the wholesale market. So Chester is a wholesaler. Sorry, he's a manufacturer and he sells it to wholesaler. And it has prepared financial statement to 20th February 2000 X5. You are an audit assistant with Durham and you have been assigned the audit of current liabilities. You have calculated payable payment period as 66 days and have asked the directors of Chester to provide explanation as to increase in the days. Correct? So you have payable days have increased from 45 days to 66 days. So you have asked the directors to provide a explanation why the payable have increased. Chester receives monthly statements from its suppliers and performs regular supplier statement reconciliations. There were inconsistencies noted, which means there are some misstatements. Balance as per ledger. This balance as per ledger will go to our financial statement. We'll go to our trial balance and we'll go to financial statement in our statement of financial position. Balance as per supplier statement is the statement that is given to us by the supplier, stating what the client is supposed to pay to us. Oxford Company 151,480 is the payable as per our books, but supplier is saying how much? 29, 296, 120. So there is a big amount of difference. Pole Company, we are at negative, right? Which means we have paid more. It's a receivable. Pole has to give us money now. But what is a supplier saying? No, we have to give 84,000. So now in this case, what is the misstatement amount? The misstatement amount will not be 84,000 alone. It will be 84,000 plus 72,168, isn't it? Because negative, you have to make it positive by 0. So 72,168 plus 72,168, 144 plus 84,000. So that will become 84,000, right? Path Company difference is small. Okay. I mean, not small, but yeah. 82,348 and 92,340. Chester has credit agreement with Oxford, under which it receives goods 14 days before the supplier raises the invoice. Okay. Chester received goods worth 144,640 on 18th February, for which invoice have been received shortly after the year end with the agreement. Chester entered into the transaction into the accounting records at the date of the invoice. So let us assume this particular invoice was entered on 3rd March. When did we receive the product? 18th February, we received the product. What is our year end? 28th February is our year end. So as per the standard, right, revenue recognition or whatever it is, once we have received the product, we are getting the control. So which means we have to recognize a expense as well as a liability because we can now use the product. Date of invoice doesn't matter is what the standard says, isn't it? So here, just because the Chester Oxford is raising an invoice after 14 days, does it mean that we should not recognize a payable on 14th February, sorry, 18th February? No. We have to recognize a payable on 18th February. You understood, Asjat? No. No, you must. Your liability is understated. Yes. The difference on the balances still have to be investigated. So we don't know why there is a difference with respect to pool company, right? Chester Finance Data has informed you that there was an error on closing purchase ledger and it was closed 3 days early. Invoices received 26th, 27th and 20th February were posted to the 2000X6 ledger, which means certain invoices which we received last few days of the year before the year end was posted in the next year. So payables is understated. Very good. The directors of Chester have confirmed that following discovery of this error, a manual adjustment was made in the using the journal book. Correct? Which of the following balances would indicate a high risk in relation to completeness of the liability? Okay, high risk in relation to the completeness of a liability. Completeness means what? Yes, there are more transactions which have actually happened, but ledger we have reduced, recorded only less transaction. So your understatement of liability will lead to completeness. Supplier with a high balance at year end and with a low volume of transactions during the year. Is it completeness issue? Is it completeness issue? Supplier with high balance at the year end. So completeness usually occurs when your balance as per the financial position is low and transactions are more. So this is wrong. This is existence, isn't it? High balance, but low volume transaction. So which means some transactions have been recorded which have actually not happened. Supplier with a low balance at the year end and with a high volume of transaction. Correct? Supplier with a low balance at the year end and with a low volume of transaction. No problem. It is directionally correct, isn't it? Supplier with a high at the year end and high. Again, directionally correct. If volume of transactions are more, if you have made more purchases, your payable is likely to be more. If you have paid less purchases, your payables are likely to be less. But if it doesn't match, then it can be existence or completeness. See, it's a very good question. Very good question. Because it is, first and foremost, it's a directional question. This is called as directional testing. So whenever we, as an auditor, want to understand if there is a potential misstatement, we do something called as directional testing. You take the number of transactions, just take the number of transactions. You will get an indicator that payable should be high. That's common sense, right? Which of the following would correctly explain why the payables payment period has increased from 45 to 66 days? So the reasons why payable payment days would have increased. Chester received prompt payment discount from one of its suppliers for the first time in XY. So if it is they are receiving discount from a supplier, will you pay on time or will you pay later? Pay on time. Because supplier is saying that I will give you discount if you pay today. But if you pay tomorrow, I won't give you the discount. So we will pay today. No. No, correct. Chester obtained a trade discount from one of its biggest supplier, which has reduced amount to that by the supplier. Okay. What will happen in this case? See, when you obtain a trade discount, what happens to your purchases? Will reduce. So let's say, for example, you obtain a discount of, let's say it was 100, you obtain a discount of 10, your payable purchase will become 90. So similarly, your payable also will become 90, no? Correct. So when you become more payable, more discount, your payable will reduce. When your payable reduces, what will happen to payment period? Reduce. Chester purchased an unusually high level of goods in February X5 to satisfy a large order and had not paid for this good by the year end. Yes, that is correct. Why? Because it is a very large, high value of goods. So your payable will increase. But what happened? Yes, you have not paid at the year end. So your payable will increase. So technically your payable payment period will increase. So this is the correct answer. You don't have to go anywhere else. You don't need to even see the fourth point, but let's see. Chester took advantage of the extended credit term offered by the new supplier in respect of a large order, which it had fully settled by the year end. So if they have settled, payable is zero, no? Right? Yeah. Yes, that could be an indication of the payable payment. Yes, you are right. But they will not give you contradictory statements, or it will be checkbox. You have to select two. Which of the following is an appropriate action in respect of the inconsistencies in the balance with Oxford Company? The auditor should take further action on this timing difference, which has resolved upon the receipt and posting of the invoice. The auditor should request that the purchase ledger is amended at the reporting date. The auditor should contact the supplier and request a supplier statement at the current date. The auditor should request that an accrual is created in respect of the goods received but not yet invoiced. Which of the following appropriate action in respect of inconsistency in the balance with the Oxford? So what happened with Oxford? This is the balance, right? So as we discussed, this amount should be what? Included as a payable. right? So what? It's an incorrect treatment. So we should mention the correct treatment to the client. What is the correct treatment? Definitely not further action, isn't it? Definitely, if they say that you don't need a further action, the balance is misstated. Auditor should request that the purchase ledger balance is amended at the reporting date to reflect the recent invoice. Is that the correct one? It's not because of the invoice that why the payable should be created. It's because of the product was supplied before the year end. Yes, you understand. So even though invoice was received after the year end, we have to recognize it because we have received the product. So what if, just imagine, just think it in another way. Just imagine that we received the invoice 2 days before the year end, but we got the product only after the year end. Do we have to pay? No, we don't have an objective because we have not received the product. So it doesn't matter when you received an invoice. If invoice is received raised in advance, or even if invoice is raised later, when we received the product, that's what the accrual concept will work. So accrual concept, it should be accrued. The auditor should request that an accrual is created in respect of the goods received, but not yet invoiced. This is the correct answer. Clear, no? So what if, now I'm asking you a question. What if you received the invoice in advance and you paid the amount, but you have not received the product? What will be that? So let's say assume that the same amount, correct? It's a prepayment, no? You have not received the product, but you paid in advance. So it's advance payment. It's a prepayment. Debit, prepayment, credit, cash. Still, you are not showing a purchases. Correct, right? Once you have received the product, then we will debit purchases, credit, prepaid expense. You understand? Yeah. Which of the following would be valid explanation of the difference in respect of pool company? Complete the following sentences regarding the difference in respect of pool by selecting from the operations provided. An invoice for dash has been dash. An invoice for dash has been dash. Pool company. This is the question. Pool company balance is showing 72, 168. So what is the total difference? Total difference will be 84, 235 minus of minus. Yes, minus. Okay, I'll put it as plus. Plus 72, 168. This will be the total difference. Correct? So what could be the potential issue or potential reason for this misstatement? So an invoice of 156,403 has been posted as a debit note, received and processed prior to the receipt of goods, paid twice. C, paid twice. That's the correct answer. Of what amount? 156. The way to answer this kind of question is first you identify the difference amount. Difference amount is 156,403. So which means these two can be eliminated. Correct, right? These two can be eliminated. So this is the correct answer in the first paragraph. Second, if it is posted as a debit note, what is that debit note? It is a return. It is a return. Correct? So that would not take into consideration, isn't it? Because what will happen if you cannot post the same amount, same amount twice as a debit note? No, there will be only one invoice. That invoice, even if you post twice as a debit note, then this effect will happen. Correct? Yes, because the invoice have been paid twice. Yes, it will work in this way. You understand? And if it was a debit note, liability of 156,403. And when you create a debit note, what happens? That 156,403 will reduce to zero. Correct, right? Received as a and processed prior to the receipt of goods. Then it will be prepaid expense. It will not be in the liability, right? Just what we discussed now. So only if we pay twice, what happens? Debit, cash, credit, liability, 156,403, liability is up. Debit, cash, credit, liability, reduce the liability. Same thing again, reduce the liability. So balance became 72,403. Clear, right? Right? So this is the correct answer. Good. Which of the following would not provide sufficient or appropriate evidence over the completeness of the respect of bath company? Obtain the journal book and confirm that all invoices recorded as received from bath dated 26th to 20th of February has been manually adjusted. Bath company. Bath company, what happened? 26 invoices received on 26, 27, 28 were posted to the 2000 X6 ledger, which means for the next year. Right? So what should be the appropriate evidence over the completeness? What should not be? I'm sorry. What should not provide sufficient appropriate evidence over completeness? So you need to identify which of the items are completeness, then you will get the wrong answer. Otherwise, if you know exactly, then select the correct answer. All right. So obtain journal book and confirm that all invoices record as received from bath company dated 26 to 28 have been manually adjusted for. It is a completeness testing. It is substantive procedure for completeness testing. So you are taking outside the ledger, identifying the invoices outside the ledger from the journal book, correct? And then reconciling back to the ledger. So it is a completeness testing, right? Review the accounts listing to ensure that goods received from bath company post year end for which an invoice has not been received have been recorded in the correct period. That is not the issue here, isn't it? Correct? Reviewing the accruals listing would not help the auditor to confirm the purchase ledger, whether they are accrual or recorded separately from purchase ledger balance. Isn't it? Because those have not been included as ledgers. That is the issue, isn't it? So if you review items which are out next year end, you are not going to get anything. You have already identified the invoices. So this will not help you, correct? So the correct answer is option B. But look at the next one. Post year end cash payments to confirm matching invoices if pre-year end and agree to the liability. Correct. So if you have an invoice which is outstanding, you have paid it after the year end, it confirms that liability exists as of year end. Correct? The next one, review a sample of invoices received from bath company recorded post year end and match to GRN to determine if they should have been recorded at the, they're also correct. Correct for the completeness. Why? Because you have received invoices post year end, and if you have received the product, then it should be recognized as a liability, isn't it? Just what we said in this angle, correct? We received the invoice 3rd March, but we received the product on 18th February. So that is a completeness testing, isn't it? Because ledger is understated. So the correct answer, which is not going to help us, is option B. Clear? Right? Yeah. Okay. Any questions? Okay. Let's look at the last question and then we'll pause for a break. Okay. Viola is a manufacturer of shoes. You are an audit manager with Cello and Co. You had done this question, Bhavana, before? Same. Chester also you had done. Oh, okay. What about you, Anak? No. Huh? Okay, is it? Because they are past exam questions, no? Yeah. Maybe because of that. But it's good. You are performing an overall review. Have you done this, Viola? No. Viola is a manufacturer of shoes. You are audit manager with Cello, and you are performing an overall review of financial statements for the year ended 31st December X4 prior to the issue of the audit report. It is 1st July before profit before tax was 131.4 million. 2000 X3 is 120.9 million. Analytical procedures. As part of your overall review, you have performed, where did it go? Yeah, as part of your overall review, you have performed analytical procedures over the draft financial statements and have noted that trade receivable collection period is lower than it was during the interim audit performed. You are aware that the credit control of Viola left the company in November 2000 X4, and the directors have said that as a result, the company is experiencing financial difficulties in debt collection. During the year, Viola revalued its head office, and as part of your review, you are considering the detail which it disclosed in the property, plant, and equipment note in draft financial statements. Uncorrected misstatements. Okay. These are uncorrected misstatements, which means misstatements which are identified but not corrected. But whether they are material or not, we have to determine. Interest payable omitted in error, 1942 million. Additional allowance for receivables required, 9 million. Error in sales resulting in understatement, 8.5 million. Write-off in faulty goods, 2.9 million. The adjustment for faulty goods listed as an uncorrected mistake above relates to an entire batch of shoes, which was produced on 12th December. The audit work concluded that the cost of this inventory exceeded its net realizable value by 2.9 million. The directors dispute the audit team's figure and believe that the realizable value still exceeds the cost. Right. So for each item, we need to check whether it is material or not. Now, what is the materiality? 134.1 is the profit before tax. So multiplied by 5%. So 131.4 into 5%. 131.4 into 0.05 is 6.57 million. Right. So 6.57 million is the materiality. So definitely immaterial, not material, material, material. What about this one? Immaterial. They are not material yet, correct? But definitely in aggregate, these are all material, right? But this one we need to determine because there is a dispute in nature. This one and this one. Because 131 is the profit before tax, no? It's a huge amount. Right. Which of the following would be part of the auditor's overall review of the financial statement? Establishing whether preconditions of an audit are present. Will it be part of auditor's overall review of the financial statement? Establishing whether preconditions of the audit exist or not. Overall review of the financial statement. Overall review, do we check the preconditions? Preconditions should be checked even before taking an audit. Assessing whether the information and explanation obtained during the audit are adequately reflected. Yes, correct. Performing a detailed review of the audit working papers to ensure that the work have been performed. In overall review, you will do the overall review after doing the detailed review of working papers. Correct. Overall review, you just look at the financial statement, do ratio analysis, compare it with the prior year, and check for any potential misstatements. You understand? So the correct answer will be 2 and 4. Review the adequacy of the disclosures of the accounting policy. Yes, that we will do it in overall review. 2 and 4 is the correct answer. Which of the following is a valid explanation for the inconsistency between the results of analytical procedures on trade receivable and director's statement regarding debt collection problems? A change in the sales mix towards high value products. Change in sales mix towards high value products. Which of the following is a valid explanation for inconsistency between the results of analytical procedures and trade receivables? So trade receivable happened. What happened in trade receivable? Trade receivable collection period is lower. So why trade receivable collection period will go down? Because you have collected the amount. Your cash received was high. Trade receivable balance is low. Or sales are high. So trade receivable, the formula is such that trade receivable divided by credit sales into 365. So if trade receivable goes down or credit sales goes up, then your trade receivable collection period will come down, isn't it? Correct. So a change in the sales mix is a valid explanation. Okay. Change in the sales mix towards high value products. Okay. An increase in proportion of cash sales since November X4. Okay. An increase in proportion of cash sales. Yeah. Since November 2000 X4. An increase in the rate of sales tax in the December 2000 X4. Sales growth 1% per month. on trade receivables. And director's statement regarding debt collection. So what did the director said? Interim perform. You are aware that the credit control of ILR left, and the directors have said that as a result, the company is facing difficulties in debt collection. So which means that what is happening? Which means is trade receivable going down? No, trade receivable is actually increasing, isn't it? Why? Because debt collection problems we are facing. So people are not giving us money, isn't it? So because of that, what will happen? Your trade receivable collection period can go up, but trade receivable collection period has gone down. Why it has gone down? See, change in sales mix towards high value products. To an extent, yes, but that's not the correct answer. I'll tell you why. Because when when we sell high value products, technically your sales value will go up. But if they are sold in credit, trade receivable can also go up. Correct. So that's not the correct answer, even though partially it is right. Right? In increase in rate of sales tax, it is not impacting. Right? It is not impacting. Correct. Right? It is not impacting because your sales tax will not be included in your sales. It will be go to tax payable, even though your receivable will be high. Right? So to give you an example, when you have a sales tax, okay, let us assume that you product amount was 100 plus tax was 18. So total is 118. Debit trade receivable will be how much? 118. Credit sales will only be 100. Credit tax payable will be how much? 18. So your trade receivable will go up, but your sales will be lower. So your net trade receivable period will be higher. But here it has gone down. So that is also not the correct answer. Sales growth of 1% per month over the year. No, again, same impact. No, if sales grows, trade receivable can also go up. But what could be the reason? Increase in proportion of cash sales. Because your trade receivable balance will be lower, but your total sales will be higher. If you are calculated based on total sales. You understand? Yes, that's an inconsistency, right? Yes. Which of the following? Yeah. Yeah. No, no, debt collection issues, their receivable amount will be higher because so let's say that I am facing debt collection issues. I would not have contacted you and you have forgot to pay me. So my receivable will be higher. No, that is debt collection issues. No, no, no. That's what they're talking about, the inconsistency. That's what the inconsistency is happening. So debt collection issues technically low. Your trade receivable period should be higher. No, but it is lower. Why it is lower? Because more cash sales. So they have calculated receivable period based upon trade receivable divided by total sales. Which of which of the following details should be disclosed in the revaluation of the head office if the auditor is to conclude that disclosures are adequate? Effective date of the revaluation. Should it be disclosed? Yes, definitely yes. Yes. So there was a revaluation of head office. What are the items should be disclosed? Effective date of disclosure, effective date of revaluation. Yes. When did the revaluation happen? Yes, it should be disclosed. Name of the valuer. Is it necessary? No. Amount of the revaluation increase. Of course, yes. Carrying amount of the head office under the cost model. Yes, because carrying amount minus revalued amount will become our revaluation surplus. So carrying amount will be reported, revalued amount will be reported, thereby result showing the revaluation surplus. Huh? Okay. So the next question, question number 14. Which of the uncorrected misstatements numbered 1, 2, 3 must be by the audit team must be adjusted for if the auditor is to issue an unmodified opinion? So if they want to issue an unmodified opinion, which of the uncorrected misstatements must be adjusted for? Uncorrected misstatements must be adjusted for. So we calculated whatever is material, right? Which is the material items? 2 and 3. So you know the answer? 2 and 3. So misstatements 2 and 3 are only material because materiality is 6.9 million, correct? And those items which are material are 9.1 million and 8.5 million. 1.9 million is not material. 2.9 million is also not material. Is yeah, aggregate level also 1.9 plus 2.9 is coming to around is around 1.942 plus, sorry, 1.942 plus 942 plus 1.942 plus 2.9 2.9 4.8. So still it is immaterial, lower than the materiality threshold of 6.9 million, which is nothing but 131 into 5%. All adjustment required by the auditors have been made to the financial statement with the exception of the adjustment relating to the faulty goods. Which of the following correctly describes the effect of this matter on the audit report? Unmodified opinion with no further disclosure. Unmodified opinion with disclosure in emphasis matter paragraph. Qualified opinion due to material misstatement. Qualified due to sufficient appropriate evidence. Statement 4, which is due to faulty product. This one. Write-off. There was supposed to be an NRV write-off, but the directors are not willing to do the write-off. So firstly, is it material? No. So you can issue unmodified opinion. But when, where? In emphasis matter paragraph? Why? Does it change the user's decision-making capability? See, just think that you are the user of the financial statement. Just because you report that there is an NRV, which is only 2.9 million, the material amount is 6.4 million. Does that going to impact the decision-making capability? No, it is only representing how much? 2.9 divided by 131 is only 2%. What is 2%? If you have 100 rupees, 2% is 2 rupees. If you lose 2 rupees, will you spend a additional number of hours on that? No, you won't. You understand? So emphasis is not going to change your decision-making capability. So hence, there is no further disclosure that is required. See, NRV is always a estimated value. Correct. So directors and contradict can come and say that, no, you have calculated the NRV incorrectly. You understand? What if tomorrow there is no NRV at all? There was faulty products. They were able to sell it at cost itself. Then that can also happen, right? So it's not material. So then we can leave it there, right? And if it is not, no, you see, key audit matters is different, right? Key audit matters if you are facing difficulty, yes. Key areas of audit, yes, we should have mentioned it. But just because of this sentence, we cannot say that it will be in key audit matters. If they had given further sentence saying that audit had spent lot of time to calculate the NRV, then it is a key audit matter. You understand? So that difference of identification is very crucial, right? And emphasis, you have to think from the perspective of a user. In key audit matter, you have to think from the perspective of an auditor. Did auditor spend time? Key audit matter. Will the user's decision-making capability will be affected? Emphasis matter. Because if there was a fire, yes, it's a material issue, right? So you will have to emphasize it. Someone filing a suit against you, emphasis matter because you have to mention it because tomorrow the company can have some issues, legal issues. That's the situation. Okay. Yeah. So we'll take a break of 15 minutes, 15 to 20 minutes, and then we will look at some more questions. Okay. From most probably I'll be looking at practice platform questions of or specimen exams. Let me see. The other is something called as additional. Yeah. Let this additional CB mock your mock exam. Let us look at practice platform. We'll do some questions from the practice platform. Okay. Yes. Today we'll focus completely on section A and make sure ourselves comfortable with section A. Tomorrow we'll focus on section B, and day after tomorrow we'll do random questions from all the areas. Okay. Small questions. Yeah, we can do that. Yeah, we can do that. Then we'll focus on that because I don't want to something which you already have. I don't want it to do. Which are the questions that I have not done? That actually, it's not good. I checked that. If you see, they have not given enough information on that. It's not that relevant. If you want, you can do that, but I would recommend you to do it by yourself because it's a small question. It's very small question. Yeah, you know, very small questions, and that too, it's quite old. Yeah, yeah. So we'll look at this specimen exam too. I think we have already done this. So wait a second. Let me just. Yeah. So practice exam two. What happened? Kahin. There will be verticals. Hmm? So you have to close again. I think it's coming for me. You have not viewed the entire screen. Same issue. Yeah, now it's okay. Yeah. Just refresh it so it will come. Okay. So the board of directors of sister company are concerned that they are not currently applying the best practice in terms of the corporate governance and are seeking to make improvements. The company currently has three non-executive directors on the board who are paid fee which changes annually depending upon the company's performance. The non-executive director all sit at the audit, nomination and remuneration committee. There are currently no formal documents setting out the responsibilities of these committees. At present, sister company does not have an internal audit function, but directors are establishing a team which will be responsible for a range of internal audit assignments. The following is the current proposed structure of the internal audit department. Finance director, head of internal audit manager, audit assistant, and audit assistant. Okay, this is the structure they are proposing. They are only required to be filled is the head of internal audit. There are two potential candidates. Paul Belling, a consultant who helped design and implement the company's internal control system. Right. So he cannot be head of internal audit. Why? Self-review threat will happen, right? Because if he has assumed management responsibility and he goes and audits the internal controls, it will be ineffective. Maria Marquez, who is currently an audit manager at Rossi and Bell, an audit firm which has never been used by the sister company. Out of the other three members proposed on the internal audit, two of them have moved out from the other departments in sister, and one of the audit assistant has audit experience. Which of the following should include a formal document regarding the responsibilities of the audit committee? To monitor the effectiveness of the newly established internal audit function. Is it their responsibility of an audit committee? Yes. Yes. To evaluate the balance of skills, experience, and independence of the board members? No. No. Why audit committee should be checking the balance, skills, and experience of the independence of the board members? No. They are required to evaluate the skills, experience, and independence of auditors. To take responsibility for the appointment and removal of external auditors. No, they cannot. It's not their responsibility to take appointment and removal. To monitor and review the effectiveness of the internal control functions established by the company. Yes. 1 and 4. Indicate by clicking one of the relevant row in the table which of the following options correctly describes the deficiency relating to NED's remuneration and makes a valid recommendation for improvement. Option 1, deficiency comprises compromises NED's independence. Recommendation: NED should be remunerated on the same basis as the executive team. Okay. See, is there a deficiency for the non-executive director? Read this particular sentence. The company currently has 3 non-executive directors who are paid fees which changes annually depending upon the company's performance. The NED all sit on the audit and nomination committee. There are currently no formal documents setting out the responsibilities of the company. If you pay a fee that changes on the company's performance to non-executive director, it compromises their independence, right? So there is a compromise on the NED's independence, but should the NED be paid same as the executive director? No, because the executive director will have performance related pay. Bonus will be applicable to them. So that's not correct. Compromise is the motivation. Nothing. We are not bothered about the motivation of NED. Correct. Right. Corporate governance doesn't bother whether that person is motivated or demotivated. If he's demotivated, he is not eligible. He will be thrown out of the company. Correct. So that's irrelevant. The correct answer is option C. Why? Because it will compromise the NED's independence, and NED's remuneration should be amount based on the time committed. That's it. Yeah, it could fixed fees on the time commitment. So if you have spent, let's say, see, non-executive directors will always not depend their time on that particular company itself. They might have be executive directors of other companies. So when they are coming as non-executive directors, then technically, they might spend, let's say, in a year, they might spend 60 hours, 70 hours. So depending upon their time, they will be paid. Complete the sentences below to provide appropriate recommendation to improve the effectiveness and independence of the internal audit. The head of internal audit, the head of internal audit should be appointed as the head of internal audit. The audit team requires team composition, right? The head of internal audit should, very good, audit committee. Who should be the head of internal audit? Maria. Why Maria? Because is currently an audit manager of OCBL, an audit firm which has never been used by sister company. So Maria Marcus is the best person. So Maria Marcus should be the head of audit committee and should be appointed as a head of internal audit. The audit team requires more senior staff to the audit experience, no change to the current composition, more external staff to be appointed. So who are there? Audit manager, there are only 2 audit assistant. Shouldn't there be more seniors? Look at the org chart below on the left hand side over here. See, there is finance directors, head of internal audit manager, then 2 audit assistant. Ajay, you got it? No. Right. So only one of the audit assistants have experience. Yes. So more senior staff should be appointed. Only then they will have the professional competence and will have exercise due care while performing the audit. Next question. The board has started to compile a list of tasks of internal audit to carry out its setup and running. It has been agreed that the first assignment to be completed will be internal audit to review sister companies' process over capital expenditure to verify the right items are purchased at an appropriate time and price. What type of internal audit assignment does this represent? Whether the right items are purchased at the appropriate time and price. Is it a type of value for money audit? Is it a financial audit or an IT audit? It is over capital expense to verify if the right item is at the appropriate time and competitive price. Correct, because that decides economic effectiveness and efficiency. So here we are testing effectiveness, whether they are effectively purchasing the price at the right resource and put into optimum uses. When deciding on the role of internal audit department in undertaking operational audits, which of the following should the team not be involved in? Observing procedures carried out the staff, reperforming procedures documented in procedures manuals. So what the internal audit team should not do is the simplest way to put this question as what the internal audit team should not do. Should they observe procedures that are carried out by their staff? Observation is an audit procedure, isn't it? So internal audit can check whether that particular staff, how he's performing that particular procedure by observing him. Reperforming is also an audit procedure, AEIOU. So it's part of reperformance as an audit procedure. Report findings to the board of directors. Yes, that also they can do. No. Why? Because it's a management responsibility. Okay. Clear with the scenario? Look at the next scenario. Very good scenario. Okay. You are an audit manager of Elm and are finalizing the audit of financial statements of Oak for the year ended 31st May 2006. You are reviewing the results of the final analytical procedures and other outstanding points on audit file prior to recommending the final audit opinion, which is due to be signed. The following ratio analysis has been completed as part of the final audit procedures. Gross profit, final, planning. This is last year. Okay. Then you had payable quick ratio 0.2, 0.6 and 0.8. When it was planning, it was 0.6. Right now it is 0.2. So definitely some liquidity concerns can be seen. Gross profit margin has declined. Quick ratio has declined significantly. Then you have payable payment periods is increasing by 8 days. Inventory holding period is also increasing. Yes. Discussions with the finance director also revealed Orc has lost a major customer in 2006, but new business has been won past year end, which has mitigated the impact of the loss of Beachco. Oak is due to repay a substantial loan. Oak currently is negotiating the terms with the bank. But before the report is signed, this will be disclosed in the financial statements. Financial statements for the year ended 31st May X6 have been prepared on a going concern basis. So liquidity issues, uncertainty to going concern. Customer has, we have lost and we got replaced of a new customer, going concern, uncertainty. Loan repayment, going concern, uncertainty. So there is going concern, uncertainty for this company. As part of the going concern assessment, some additional issues have been noted. Which two of the following issues could be individually cast doubt on the going concern assumption? A number of personnel in purchasing department left during the year and have not been replaced. A major supplier to Oak has just gone out of business with a number of unfulfilled orders. A new product, okay, due to account for 30% of the revenue has proved to be unsuccessful. A litigation claim has been raised against Oak after the year end with the potential damages total into 3% of the year's profit. So which of them will cause what doubt over the going concern assumption? A personnel in the purchasing department. If an employee leaves an organization, does it create going concern issues? No. So definitely A is wrong. Major supplier has gone out of business with number of unfulfilled orders. Definitely, who will give us that products? And how will we sell it to the customers? No sales, no purchases, no sales, no sales, no revenue. No revenue, no, sorry, no cash inflow. No cash inflow, liquidity issues will worsen. A new product which has gone unsuccessful. 30% of the revenue, we estimated it has gone successful, no money. Gone. It's a potentially only 3% impact, so not a major issue because less than 5% and not a pervasive issue also. So correct answer is B and C. As part of the review of the final analytical procedure, you compare the results to the following comments on the audit file. Company has increased the sale price charged to the customers while maintaining cost at level comparable to 2005. The company has become more reliant on its overdraft facility during the year. Due to cash restrictions, the company has encountered delays in paying suppliers. At the year-end count, a lower level of slow-moving inventory was noted compared to the prior year. Which of the above comments inconsistent with the results of the final audit procedures? inconsistent with the results of the final audit procedures. This is the final audit procedures. Okay. The company has increased the sale price charged to the customers while maintaining cost at a level comparable to 2000 X5. So if they increase the sale price, what will happen? Good. Exactly correct. Gross profit margin will increase. So it is definitely an inconsistency. Point one is an inconsistency. So you can say point one. So you can eliminate these two, right? So the correct answer could be 192 and 194. So no need for, yeah. So we can just check whether two is correct. The company has become more reliant on its overdraft facility during the year. Do they have overdraft facility or they have a substantial repay loan? They don't have overdraft, right? They have loan, substantial loan, which is supposed to be repaid. Correct. Yes or no? So the correct answer will be 1 and 4. Yeah. Due to cash transactions, the company has encountered delays in paying suppliers. No, if they have cash transactions, they don't have to pay, right? They will not have trouble to pay to the suppliers. They will have more cash with them. At year-end inventory count, a lower level of slow-moving inventory was noted compared to the year-end. Hence, correct. True. No, which of the following are inconsistent with the results of the analytical procedures? 1 and 4. No, yeah, 4 is inventory. Oh, no. Inventory at the inventory count, a lower level of slow moving inventory was noted. Lower level. So if it is lower level, your inventory period will be lower, right? See, if a higher level of slow moving inventory will go up, holding period will go up. So lower level means your inventory will be lower and then your inventory holding period will also be lower. No. Anak, did you understand? Yes, no. Okay. So the correct answer will be 1 and 4. It's not consistent. Good. Which of the following procedure would provide most reliable evidence in relation to the new business one post year end? Review the post year end sales orders from the new customer. So they're saying that we lost a customer, but we received a new business. Correct? Post year end. Post year end, we received new business. Whether that statement is true or false, how will we identify? What procedure we should do to check that? Review post year end sales orders from the new customer. If we have post year end sales orders from the customer, does it mean that we have won the customer? Yes or no? Sure. Okay. Inspect the email correspondence between the sales director and the new customer. Does that give you clear identification that we have received new customer? Okay. Whether we have received the new customer or not, whether we have got the new customer or not, how will we verify? What is a reliable evidence? Right. Obtain written representation from the agreed between the new customer. First and foremost, even if we get written representation, it is just an internal document. It doesn't prove anything. Internal correspondence between the sales director and the new customer. Just because there is an email confirmation doesn't mean that we have received the customer. The customer would have agreed to give the orders, but he has not given the orders. Review of board meetings. Again, it is just an internal document. The correct answer is exactly. So that will verify that we have received actually orders from the customer. So we have got new customer. The initial going concern assessment conducted by the management of Oak Company covers the period to 30th November X6. When did we close the year end? What is the reporting period? 31st May 2000 X6. Going concern assessment should be done at least for how many months? 1 year, 12 months. So what is the correct answer? Request management to extend the assessment to cover at least May 2000 X7. Simple question. Correct, no? right? The audit opinion engagement partner has concluded that the disclosure included in the financial statement in relation to the loan negotiation is adequate. Additionally, the audit partner has commented that the disclosure is essential to the user's understanding of the financial statement. Complete the following sentence identifying what form of auditor's report should issued. An auditor's report with dash opinion and dash paragraph should be issued. What's the correct answer? Whether it should be modified or unmodified. Right. So what are they doing here? Partner has concluded that disclosures in relation to the loan negotiation is adequate. So they have adequate disclosures. Additionally, the audit partner commented that this disclosures are essential to the user's understanding of the financial statement. So it should be unmodified opinion. But where it should be mentioned? And dash matter should be issued. Dash paragraph should be issued. Is there a material uncertainty? Yes, there is. No. Yeah, there is, right? Because yes, correct. Loan is refused, going concern issue should be there. So it's a material uncertainty should be there. Commented that the disclosure is relevant to the user's understanding. So the loan is an material uncertainty related paragraph. So it should be disclosed in the yes. Second thing is if you look at the options, no, you will get an idea which one is correct. In other matter paragraph, we can mention only if we are a new auditor. Other matter paragraph is relating to something else, not emphasis, not key audit matter. Everything else will be other matter. Here it is actually a significant for the decision maker capability. So hence it has to be emphasized. So since there is no emphasis, what we will do, we will take it up material uncertainty. No, other matter paragraph are those not mentioned neither in emphasis nor in key audit matter paragraph. So like for example, this is a new client for you. So you will mention it in other matter paragraph that you did not audit this company. That is an example of an other matter paragraph. Okay. Wages of the which of the following? Okay, I think this is a new scenario. You are an audit senior at Jones and are currently performing the final audit of Walker for the year ended 31st October 2006. The company is a manufacturer and retailer of shoes and boots. The current audit senior is ill and you have been asked to complete the audit of payroll in their absence. On arrival at the head office of Walker, you determine the following data from a review of the current year and prior year audit files. As of 31st October 2005, Walker had 500 employees. On 1st November X5, 10% of the staff were made redundant. Effective immediately, discontinuation of a product line. On 1st January, all remaining staff received 6% pay rise. Over the course of the year, sales levels met performance resulted in a fixed bonus of 1,500 being paid to each employee on 31st October 2006. Which of the statements explains the cut-off assertion for wages and salaries? Cut-off assertion, fulfill. Okay. Wages and salaries have been fairly allocated with a statement of profit or loss. Okay. Does this explain cut-off? No. It fair representation. Very good. Wages and salaries have been appropriately calculated, taking into account all relevant taxation cost and valuations, accuracy and valuation. Wages and salaries have been incurred during the period have been respect of all personnel employed by the Walker. All personnel employed by the Walker. Occurrence, not cut off. Right? Because whether it have included in the current accounting stop, then it would have been cut off. But whether have been accounted in respect of all personnel employed by Walker is occurrence. Whether they have occurred in the correct period for the correct people. Wages and salaries accounted relating to the current year end. Cut off. Right. Next question. The following audit evidence have been gathered in relation to the in relation to the wages and salaries. Order the evidence in terms of its reliability, starting with the most reliable. Which is the most reliable? Sorry? Just try it out. Always most reliable will be external and auditor driven. In this case, which is the one which is driven by auditor? Okay. So recalculation. So if you look at here, verbal confirmation from the director is an internal document. Written representation, internal document. Of gross pay, yes, but it was done by an internal auditor. No, right? Yes, proof in total is done by the audit team member. Most. Then what happens? Would be yes. Second one would be recalculation. Then representation. Then verbal confirmation. See, written representation and verbal confirmation are both internal, right? But why we put verbal as verbal? It's not a written document. Anything which is not written, something which is said in there is it's not a reliable because the finance director can change his words. Good. The prior year financial statements of Walker included for 17 million for wages and salaries in statement of profit or loss. What would be the estimated current year wages and salaries expense, ignoring redundancy cost based upon the data gathered by the review of the audit files? So prior year financial statements included 17 million for wages and salaries. What would be the estimated current year wages, ignoring the redundancy cost? So how will you calculate this? This you can do it basis on a proof in total basis, right? It's an estimation, correct? How will you do this? Yes. Have been made redundant, correct? Yes. So I'll just show you the calculation. So we have prior year, okay, salaries. How much was prior year salaries? 17 million, correct? But let's adjust it for redundancy. Adjust for redundancy. What is 10 redundancy percentage? 10%. So 70 million into 90%, correct? Will be 15.3 million. Then what happened? All staff, remaining staff received a 6% pay rise. So which means pay rise. When did they receive it? 1st January. What is our year end? 31st October. So for how many months you have to prorate? January, February, March, April, May, June, July, August, September, October. 10 months we have to prorate it. So pay rise will happen 15.3 million, correct? Into 6%, correct? Into 10 by 12. So that will be 0.765. So 15.3 into percentage into 10 by 12. Then what happened? Bonus, right? For each of the employee. So bonus. How much employees were there? 454. No. Over the course, sales levels. Yeah, 450. Because there are total 500, 10% or redundant. So for 500 minus 10, which is 450. So 1500 into 450. Correct? So 1500 into 450 will be 6. Okay, I'll put it as, yeah, 0.65 million, right? So 1500 is one, yeah. Yeah, no, not this also. These are all in millions, so I'll put it in millions. 3, 4, 5, 6. Right? So total will be 16.740. So the correct answer will be option A. Very good question. See, these kind of questions will make you ready for the practical experience. Yes, PM level question. At the same time, when you do audit, this is something that we do as an auditor. We have to do it. This is called as proof in total. This is the example of proof in total. You're taking the prior year number and then recalculating for the current year with the adjustment. Now, if the wages and salaries in the current year is greater than this, then there is a potential misstatement. Or if it is lower than this, then there is a potential misstatement. That's what analytical procedure is all about. Right. Which of the two following are substantive analytical procedures for wages and salaries? Trace and agree the total wages as expenses to the draft financial statement. It is a substantive procedure, not analytical procedure. Analytical procedure, ratio analysis, comparisons, proof in total, correct? So it's not analytical procedure. This is directly checking to the evidences. Recalculate the gross and net pay for a sample of employees. Agree to the payroll records and investigate discrepancies. Again, substantive procedure. Test of details, not analytical procedure. Compare the current year total payroll expense to the prior year, analytical. Perform proof in total, analytical. Last question for the objective question. You have been given list of procedures to carry out on revenue and you have decided to prioritize those which deal with the key assertion called as occurrence. Which of the following substantive procedure provide evidence over occurrence assertion of revenue? Compare the reported revenue figure to the budgets and to the previous year to investigate significant differences. So occurrence, to test occurrence of revenue, what are the procedures you will do? Compare the reported revenue to the budgets and to the previous year. It is an analytical procedure. It is a true procedure. Why? Because when you compare the revenue to the budgets, you will get an idea whether revenue is overstated. Correct? When you compare to the prior year, you will also get an idea whether it is overstated or not. Analytical procedure can act as a procedure for all the assertions. So yes, one is correct. Select a sample of goods dispatch note and agree to the invoices in the daybook. That is completeness testing, because you are starting outside the ledger and reviewing back to the ledger. Select a sample of invoices from sales daybooks and agree to the GDN. Simple question. You're starting from the ledger and verifying back to the outside the ledger. So it's a occurrence test, right? Select a sample of invoices and recalculate the invoiced amount agreeing to the price list. Accuracy. Right. So occurrence test, completeness, occurrence, finally accuracy. Right? Yes. Done. It is 1st July 2005. You are an audit supervisor and are conducting the year-end audit of X company. You are currently undertaking the audit testing in relation to the non-current assets. Which two of the following procedure would provide substantive audit evidence in respect of the completeness of the assertion? So, completeness of the assertion, substantive analytical procedure. For a sample of assets held in the factory, no, which are the following substantive audit evidence in respect of completeness of the plant and machinery? For a sample of assets held in the factory warehouse, record the asset identity number as marked on the asset and trace back to the relevant entry in the non-current asset register. Yes. So we are starting outside the ledger. Review board minutes to confirm all major capital expenditure are noted and authorized. No. No. Because that will test for what? What? Valuation. Because all major items are noted and have been authorized. Accuracy and valuation. Isn't it? Whether the amounts. Right. Trace the sample of cost recognized in repairs and maintenance account invoices and determine the nature of the expenditure and assess whether any capital items have been expensed. No. This is correct. Completeness only. Because tracing the assets from the non and the what you're doing here, you're tracing sample of costs that have been recognized in repairs and maintenance account. Right. Right. So when you recognize it in repairs and maintenance account, your asset cost will be lower, but your expenses will be higher. So check whether the repairs and maintenance, some of them should be capitalized or not. If they have been expensed off, then assets is understated. You understand? Hmm? Correct. It is 1st July 2005. A and Co are the external auditors of B and Co for the year ended. For a sample of fully depreciated, inquire with the management to confirm whether the assets are being still used in operation. What is that? Sorry, this is valuation. This is valuation. This is test of control. B is test of control. Whether, yeah, this is valuation. My bad. Yeah, this is valuation. Okay. It is 1st July and our A and Co are external auditors of B and Co for the year ended 31st March. B has sourced external finance for the first time for the year ended during the year. The draft financial statements show the non-current liabilities in relation to the finance of 1.2 million. Which of the following procedures should be performed to confirm the loan liability amount? Right. Review the director's board minutes for evidence of approval of the external sourcing. Right. Then what is the next one? Review, agree the loan payment record in general ledger to the bank statement to confirm capital has been repaid. Agree the year-end loan liability account to the confirmation letter. Compare the loan liability at the year-end for the balances in the previous year. What is the correct question? What is the question? Which of the following should be performed to confirm the loan liability balance at year-end? Yeah. Yeah, sorry. The draft financial, yeah. How will we confirm the balance? So balance means what assertion are we trying to test here? Correct. Option 2 and 3 is the correct answer. Reviewed Boretta's evidence of approval of external finance is what? Option 1 is what? Is a test of control. Whether they are going for a loan amount after getting approval. Compare loan liability at the year-end balances to the previous year. What does it say? Analytical procedure. Correct? Right? So as such, it does not provide evidence that the balance itself is right or wrong. It just provide whether the balance is misstated or not. You're testing whether the entire balance is appropriate or not. For that, you have to compare it against the capital statement and then confirmation letter. So this is the correct answer. Clear? Next question. We'll do one more question for March 2020. I don't want to do something which is below 2020 because it's you can do it alone because it's going to be little older. Okay. Eh? Okay. Next one. You're an audit manager working in W&Co, etc., etc., etc. Which of the following are the typical requirements? Which of the following typical requirements contain the best practice with the corporate governance guidelines? Remuneration committee should consist only of independent, non-executive directors. Should consist only of independent, non-executive directors. Which is, this is, no, not, sorry, not this question. This question, I'm sorry. Which two of the following statements should be included in a written representation? All transactions in the record in the accounting records are reflected in the financial statement. True or should it be? Yes. Okay. Yes, they should be included. Due to inherent limitations of the audit, there is a risk that some materials from statement will not be deducted. Should we mention that in written representation? No. This is very difficult. This is a very dangerous statement. We cannot mention that. Professional judgment and skepticism have been exercised throughout the course of the audit. That should be exercised by the auditor. Why will the evidence given by the client will have that statement? Significant assumptions used in accounting estimate are reasonable. Yes, this should be mentioned. It is 1st July 2005. You are an audit manager of X & Co. Currently finalizing the audit of Y Co. You are performing the final preparation in significant audit report. During the year, one of the company's property was revalued by an independent expert valuer. Which two of the following are audit procedure X & Co. should perform in conducting its overall review of the financial statement? Make an assessment Y's ability to continue as a going concern. Okay. Design and perform analytical procedures to confirm the financial statement are consistent with the auditor's understandability of the entity. Undertake money laundering identification procedures to confirm the identity of the directors. Assess the information obtained by the external expert in respect of the property revaluation. Which two of the following should be performed in conducting overall review of the financial statement? Overall review. Make an assessment of the ability to continue as a going. Will you assess the ability of going concern during overall review? No. Design and perform analytical procedure to confirm financial statements are consistent with the auditor's understanding. Yes. Because overall review, you just look at the financial statements and their disclosures. Undertake money laundering indication procedures. No. Because it's a no-clear item. So you will check the legal laws and regulations. Assess the information obtained by the external to no, it's a substantive procedure. Obtain and retain documentation to confirm the legal title. Again, substantive procedure, test of detail before an overall review, you perform this. Reassess the materiality. Reassess the materiality to check, confirm whether it remains appropriate in the context of Y's financial statement. Yes, and materiality should be reassessed while performing an overall review. Okay. Maybe this one also we will do because I think the corporate governance is a very good question. Okay. So which of the following statement is true or false? Sorry, which of the following statement are requirements contained with the best practice of the corporate governance? You are an audit manager working in WO and have audited for last 7 years. The board has decided to be listed in a stock exchange and the board has advised you on how to be compliant with the corporate governance guidelines. Remuneration committee should consist only of independent non-executive directors. So now you have to identify the statement and check whether they are applicable for the corporate governance principles. Now, remuneration committee should consist only of independent non-executive directors. Is that statement true? Yes, it is true. So you can select one. So one A and C, A or C. The chief executive officer should be responsible for the leadership of the board and ensuring its effectiveness. No, who should be the responsible for the leadership of the board? Chairman, not the chief executive. Non-executive director should provide constructive challenge and strategic guidance. Yeah, they should challenge the executive directors and provide guidance. That is the correct answer. Audit committee's key role is appointing and liaising with the external auditor. They are not, it's not their responsibility to appoint the auditor. It is July XY. You are the audit supervisor of Y and Co and have been assigned the responsibility for completing the detailed going concern testing for Z for the year ended 30th April. Z audit should be finalized and the financial statement signed by the 30th September X5. Management assessment of Z's ability to continue as a going concern covers period till 30th November X5. Year end is 30th April. It should be at least how many months? 12 months. It should be, we have already done similar question. It should be done at least to 30th November, no, 30th April 2000 X6. Same question we have already done in the past question. See, so you can say that there is repetition. You understand? There will be repetition. So you have to be very careful. Okay, so with that, we have completed this topics for section A. Tomorrow, we will be looking at section B and we'll be looking at questions from risk, substantive procedures and the internal control. So we'll be doing questions from those three areas. Yeah, three questions. So it will be a tougher period because we have to do 3 hours it will take to complete each of the question because 1 hour each for each question. Okay, right. So we'll do questions from the section B. Last day, we will try to do a lot of questions from other areas, right? Like direct theory questions. We will try to do certain questions of past exam question papers, direct theory questions. I'll try to find out some questions as well. So we can do all those things. Okay. Yeah. All right. Is there any other questions?